Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. And it's deeper than that, guys. I don't think I just share opportunities. I try to teach my strategies or mentor or however you want to call it. I try to let everyone in the community learn how I am doing it so that they can replicate what I'm doing. Um, my returns have been very good uh, after implementing this strategy. Um, and I've implemented it for a pretty long time. I was in technology stocks in the 2010s, and I sold them. 2019 is when I sold out of technology and went into commodities in 2020. Um, so that I've been deploying this strategy for a while. I'm not saying that I know. Back then, I didn't know as much as I do today. So obviously, I've refined things, I've changed things, and I continually learn and refine my approach. So if you guys are interested in learning how I'm approaching the markets, I use the three-pillar approach: technical analysis, ratios, and market conditions or cycles. And how I apply those and how I choose my companies, because it all matters for returns. A lot of people have been lucky enough to get very good returns this past year, ranging from 40% to even over 100% in a single year, their entire portfolios, depending on what companies they selected and how they weighted them. I do talk about portfolio allocation. I do talk about uh, weighting or position sizing of companies and what is risk, what are the risks, when is it you go big, when is it to kind of hold back. All that is important. So special is a coupon code if you'd like to sign up. It's $25 for the first month only with that code on the monthly membership, only for the first month, and a $500 charge for the yearly membership. And you can always swap from the monthly to the yearly if that's what you'd like to do. So coming down, we've got cycle investment strategy, EWZ. Now you're going to hear me talk about a lot of the same things over and over because I think that's what you want to be focused on, the opportunities. Uh, I don't create a portfolio that's 20% oil, 20% precious metals, 10% XYZ. My portfolio is created from the opportunities that are found. EWZ is up 10% since this prior post. I've been talking about EWZ for a little while. This is an opportunity. Why is it an opportunity? Why is EWZ so good? Why don't I go buy a bunch of dollar denominated assets? Currency exchange rates matter. They matter. And when the currency exchange rate is favorable for the Brazilian real, money flows are going to come piling into EWZ. That is a falling wedge, and it is breaking out. It pays a big dividend. So even if you have to wait for the movement, get paid. When I talk about the Brazilian real versus this is a falling wedge into a double bottom. You need to understand how to read technical analysis and charts. The falling wedge is buyers equaling sellers. There's usually a three hump consolidation. So this is the falling wedge. There's the three hump consolidation. The bottom is here. Now, then you get a bottoming pattern in this box. And do I know that this is the exact bottom? I don't know for sure, but that's where the accumulation is occurring. BRL, when it outperforms USD, is going to send EWZ to the upside. And there's people already positioning in it. That's the opportunity. You have to understand that you can block out the narratives that people are telling you. You can block out the analysts. It doesn't matter. People are selling, accumulating, and then it will go up. When that goes up, EWZ is going to be a beast. That's what it is. Coming down, rock bottom entries, white knuckle time. So this is silver futures breaking out. Blue sky zone. And let me see what silver's up today. The market is still open while I'm doing this. 5.6%. Remember people telling me that we could have a pullback in silver. And remember what I am saying. Don't focus on the short term. Focus on the long term. Up and handles breaking to the upside. Do not mess this up. This is not the time to be trying to time the short term. People trying to time the short term haven't lived through the bull market. I messed it up trying to time short-term stuff last bull market. Granted, I had just an inkling of how much knowledge I have today. My opinion, you do not want to mess this up. I would not be selling silver here, would not be selling silver equities. In fact, I would be buying them. Now, when I go and I look, let's pull up XAG to XAU, which is silver to gold ratio. I'm going to throw the line candle on here so it's a little bit easier to see. You guys see what I see here for the silver to gold ratio? We're starting to break out. This could be a very, very big move. This is where you don't want to sell. This entire area here, back in 2020, 2018, I bought this entire corner here. I bought the entire corner. How did I know to do that? This ratio. This ratio said I need to be here. You know what else I see? 1, 2, 3. That's a 300 consolidation. Things are going to get interesting here, right? What about this? I'm going to do something here. US 10-year yield. So the ratio, now remember, this is a ratio. Ratio peaked 1968. So we had a big run up in silver versus gold. Now, the beginning of this move here, silver went up and gold was fixed. So the beginning of this move, maybe even up to here, is kind of an unfair comparison. So that is fair. As rates broke their downtrend here and started moving higher, silver ripped. Silver outperformed all the way up here, and then gold took off. And we had a spike in 1980. So this here, this is because gold was suppressed. It was a catch-up move. But silver went up with interest rates. And I'm just going to say this, guys. We've broken out of that regime. We're in an increasing interest rate environment, and I think it's going to be go time here. So, some people will say, well, what if it doesn't? What if it lags a year or two? It's going to be an opportunity loss. No, it's not. What you do is you go around the market and you find these large asymmetric opportunities. You don't have to put all your money in one opportunity. If the asymmetry is so big, you don't have to. You need to figure out how much money to put into it where it could change your life or make a difference. Maybe not change your life depending on how much money you have, but it's enough in there to make a difference. And you don't want to go way overboard. You don't want to go all in on one sector. You don't want to go all in on a junior silver company. Come on. But this is a huge opportunity. Don't mess this up. And I think we're probably at the tail end of this opportunity. So I think we're going to get a big move, and then we'll probably see a consolidation or something. We can also look at, like, say, platinum versus silver. You can see that we're squeezed up into this corner still in a falling wedge. Eventually, silver, when it goes, I think it could do one of these, and then we'll see an outperformance of platinum out in the future, perhaps. Nice falling wedge, three hump consolidation. For platinum to outperform silver out in the future. Short term, though, silver's breaking out. It's going to rip. We could pull back here. But platinum's also an opportunity. So it's not about buying everything in one thing. It's about platinum's a good opportunity. I'll buy a little bit of that. Silver's a good opportunity. I'll buy some in that. And then you can be across multiple sectors. Um, copper. Copper's another one. That's breaking out. Now, some people think that copper is going to underperform gold. Well, in the short term, it's done that. Correct. But I'm of the belief that we don't have enough copper in this world for what we want to do. And I think copper is going to be a heck of an opportunity. So you can own both. You don't have to own one or the other. The ratio is telling us that copper's cheap. So I want exposure to it. Does that mean that gold will go down? Doesn't mean gold will go down either. Just go around, find things that are cheap. Now, I don't have to be right on every single one of my picks. If the asymmetry is big enough, what that means is that it will carry the entire portfolio if I have enough in there to make a difference. So if I have maybe 10 different sectors I choose, it starts to come down to statistics. Well, if everything I go into is a 20-to-1 return or greater, and I get a 20-to-1 return on 30% of the sectors, 3 out of 10, well, I'm gonna make tons of money. So it's not about making money on everything. And it's about being able to handle loss in some of those opportunities that don't pan out. But it just comes down to a statistics game at some point. Now, I'm not over diversified. I want exposure to certain sectors, and I'm buying it when they're very cheap. A little bit different approach than the Buffett Munger approach, but not any one approach is the best or the worst. So I just wanted to talk about that a little bit. But yeah, silver looks fantastic. It says, generally, I haven't seen a big account on X calling this silver rally the real deal. Most are in agreement it's a sucker's rally and are waiting for lower prices. It'd be poetic if long-suffering silver bugs missed the parabolic leg above $50 an ounce in silver. I'm not going to miss it. I'm in this thing. Now, I I see everyone trying to talk about the short term. I get very annoyed at it. And I do these daily updates, and sometimes it's hard for me to continually do a daily update because nothing really changes, in my opinion, on a daily basis. I could probably say that silver was good in 2018, 2019, 2020, and it's still probably going to be good 5 years from now. And people, what happens is they get impacted by the price movements. They need to understand that price movements is what the market is going to do. The market reacts emotionally. And the big trend is up. So if it takes an extra 2 months, it doesn't matter. If the trend and the return is going to be so massive, it just doesn't matter. So I look at all this, and then sometimes I just shake my head. It's like, what am I reading here in Twitter? And these guys are all trying to predict the short-term price movements. I've tried to do that, guys. It is impossible. You're not going to get it right. They're trying to fit Elliott wave theory movements to something that can be distorted. And trust me, I've seen so many charts. I've seen the distortions. And then they go back and try to fit it. It's kind of like doing the math with the paradigm that the sun and everything else revolves around the earth. And everybody was trying to get the math to work. What they figured out was the math worked so much better when the sun was the center and everything rotated around the sun. It's kind of like that. When you take a long-term approach, everything starts to make sense. It's like, oh, that's how the market is played. Everyone tries to make money fast, and that is their downfall. They try to make it quickly and in short periods of time. So they take on copious amounts of risk and they try to time things that can't be timed. They're forcing a move that they shouldn't be making. Now, if you see the bigger cycle, you see the ups and the downs in the charts, you don't know the short-term market movements, but you can see that something's down and being accumulated. You can see that something's up and perhaps maybe is being distributed in distribution, which means it's selling. That's much easier to play. And then you just have to sit in between accumulation and distribution, which is tough for many people because it doesn't happen immediately. It's not a gambler's, it doesn't get the juices flowing sometimes. It's boring. There are way too many parameters today for any macro analyst to get direction right consistently. Most macro explanations for market moves are made up narratives. Macro analysis is not what it was. Do not search for the short term narrative. Use the only real edge, the charts. I agree with that. What I do is I look at the charts and I can't tell you exactly the reasons why, but I can refute other arguments with it. I try to reason and create a narrative from the cycles that are being created. I try to understand it as best as I can. But that doesn't mean that what I have come up with is a 100% fact or is 100% right. I'm just trying to get close to what I think the markets are doing and what humans are doing and the way that I reason from it. But he's completely right. And when people say, well, what about XYZ? It's like, well, that's not what the charts are telling you. That's one of the reasons I've made the pillar, one of the pillars, technical analysis. And the other one is cycles. If you can identify where you're at in the cycle, roughly speaking, using technical analysis, you at least know that you can get in low and you can sit and wait because you're at the bottom of the cycle. Porter Stansberry, this is a big one. I'm going to read through it. It says the next 5 years are going to be very interesting for natural gas. Revolution number one, massive increases to U.S. compute infrastructure, driving huge increases to natural gas sourced grid power. Large data center completions are doubling every 4 years, but AI has compressed this to every 2 years. Estimated U.S. hyperscale completions since 2020 is 300. Leading operators, Amazon, 150 plus U.S. sites total. Microsoft 60 plus, Google 30 plus new since 2020. By 2030, expect 500 plus more large U.S. facilities. These centers are primarily in Northern Virginia, the largest market, Texas, Arizona, and Atlanta, Phoenix. Energy demands 20 to 25 gigawatts from new large data centers completed since 2020. That's the equivalent to the output of 15 to 20 new natural gas power plants, 16 to 20 million U.S. homes annually. If trend holds, new builds by 26 to 2030 will add another 50 to 60 gigawatts, more than double existing demand. Energy sourcing for new builds reveals a dominant reliance on natural gas. This is driven by the need for reliable, scalable, baseload power to meet 24/7 demands. The bottom line, today, if all large hyperscale data centers were run at 100% capacity and were powered only by US natural gas, they would consume roughly 6% of total existing natural gas production. By 2035, that figure will be over 20%. Revolution number two, natural gas export demand is about to almost triple. In 2024, natural gas exports, 11.9 billion cubic feet per day, consumed 11.5% of total U.S. production. There are currently 7 major LNG construction projects near completion, underway, or planned and approved. Exxon Qatar Golden Pass, BG's Plaquemines, Cheniere's Corpus Christi Stage 3, NextDecade's Rio Grande, and so forth. When completed, 2029, these facilities will add another 18 billion cubic feet per day of export capacity, taking the total export capacity to 30 billion cubic feet per day, 11 trillion cubic feet annually, roughly 3 times the current export capacity. This represents roughly 30% of U.S. production. That's more than the entire U.S. electrical generation sector uses today. By 2030, LNG exports, AI compute energy demand will consume 50 plus billion cubic feet per day of natural gas, or roughly half of the total production. Supply is expected to grow at most by 10%. Coming natural gas price spike will be extreme at times, like in the winter when demand surges. Pipeline capacity is very tight. Permian takeaway is already at 95% of capacity, and new pipelines take forever to permit and build. The other major issue is, unlike LNG, data centers never turn off. There's zero seasonal flexibility. We'll see consistent 10 plus per dollar per MMBTU natural gas prices by 2030. And when there's a significant demand spike in the winter, we'll see $50 gas. What do you think about that, guys? We have major natural gas demand. And guess what we've been doing on the website? We've been buying natural gas producers. We've got exposure to this, and it's coming. It's going to be so big that I think coal prices are going to go ballistic. Such great opportunities to be in during this big, gigantic bull market. Here's another thing, just to let you guys understand another aspect. He's missing revolution number 3. If we have problems in oil, where oil supply goes down, all solutions are electricity-based solutions, battery electric vehicles. Well, we'll just create electric furnaces, electric water heating, electric oven stovetops. Our solution is all electric. So if oil has a problem, what do you think people are going to do? They're going to go out and buy battery electric vehicles if the price of gasoline is $7 a gallon or $10 a gallon? That's revolution number 3. And what's going to power the grid? Is it going to be more natural gas? Is it going to be coal? Can we produce nuclear fast enough? I don't know. This is going to be a crazy 2025 to 2040 time frame for energy. And I think this is the biggest investing theme in the world. And here's another thing. Here's revolution number, what was it? Did I say 3 or 4 there? I don't remember. Revolution number 4. If we don't have the copper to make this all work for electricity-based solutions, and if we don't and can't scale some of this stuff because of mineral constraints in copper, we're going to use all the oil that we can get. That demand's going nowhere. So this is going to be really interesting. I am positioning for this exact thing. I love it. I love it. Great futures AM update. Dry bulk, Capesize down and Panamax down today for dry bulk. Tankers are up. VLCC's up 5%. Suezmax up 3%. Looking good. Rock Bottom says the chase in silver is going to be epic. And it will be. It will be. And remember, all of our solutions, they cross a few minerals. If we have problems in energy, we need to cross the silver-copper mix here. And there's other minerals too that we need that are going to go into batteries and all sorts of stuff. Gigantic. There's gigantic deficits between supply and demand that exist out in the future, and you need to know what those deficits and where they're located. And I've looked at it. And I'm positioning for it. Morgan Housel says, read last year's market predictions and you'll never again take this year's predictions seriously. Predictions are not where you want to be. Value is what needs to guide you. Value, value, value. The most broken things in America: the national debt, the healthcare system, the tax code, K-12 education, obesity rates. What am I missing? Well, I think those all tie to a single thing. So here's the most broken thing. Number one is our money system. The way that money is created and the way that we get this inflation, that is massively broken. And that's probably the biggest broken thing. Um, Government spending, which is the national debt, that would be a big one. But that's the national debt is a is a function of having bad money. All of these, the tax code, the healthcare system, all those, it's like a function of having bad money. I also think that not just education, it's just the way that things are rewarded in the market. And it's very financially driven instead of hard asset driven. And I think that will change. Oh my God, if you're not bullish on gas and utilities, you better be. This is from EIA's outlook released today, and natural gas is about to absolutely move higher here. They also have nuclear going up. They've got coal going up. They've got everything going up. Everything. Electricity generation for data centers in the United States in 2020 to 2035. Canadian oil and gas companies seem unfazed by the decline in crude oil prices. Wonder how long that will last, and it's lasting at this time. That's what I'll say, but there's a gap there. Kind of an interesting gap between crude oil and all the rest of commodities. This one is CEF. It said the blue breakout 20 months ago. I'm not going to read through all this. There's a lot there, but CEF is the Sprott Physical Gold and Silver Trust. Breakout and ribbon. Absolute parabolic-like move. And it looks good. Yeah. Waiting for energy feels like waiting for Godot. XLE almost there. We're ready to try to break here and run. We're positioned, very well positioned for a breakout. They don't want this to happen, guys. This is what inflation's gonna. This is like the realization of inflation. Passes through energy, and it's coming. It's coming. Oil bullish trend line break and a back test. I don't know. I think it got sold off pretty hard today. Maybe maybe it's on purpose. I don't know. Hold on, it'll come. Oil shippers are starting to rip. BWET just broke out of the long base, a clean breakout from compression. When freight rates rise, energy flow accelerates. Liquidity always finds movement first. This is the Commodity Trust Breakwave Tanker Shipping ETF ribbon. We're starting to get more shipping of tankers flowing oil around the world. I think what that means is that things are starting to pick up. This is silver versus the SPX. It says posted this ratio chart at green dot saying it is a true lifetime opportunity not to be missed. Also said back then that good times were coming for silver miners. They did. It was clear that silver was to outperform SPX going forward from the green dot. The global capital rotation into precious metals started when all the PM ratio charts have posted turned big picture, which I posted on real time for this chart. So this chart is silver versus SPX, monthly candlesticks, and a breakout where silver's outperforming the S&P 500. Note the black arrow is unchanged since posted chart at green dot. So it's go time. It's go time. Silver looking bullish. Watch out for the bear flag. I think I read that one last time. Everyone trying to predict short-term price movements. 50-year cup and handle, guys. It's going to break higher, in my opinion. But that's where we're going to end it. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special as a coupon code. And that's all I've got for today. So we'll catch you next time, guys. See ya.